Welcome to Better Banking. My name is Paul Gentile. In this month's edition of our show, we'll be focusing on loans, business loans, and student loans. Tim Draper at Navigant Credit Union will introduce us to Jeff Cassione, Vice President of Business Banking. He will help us understand the ins and outs of business loans. But first, let's talk about student loans. With September marking the start of another academic year, there's more than books and studies in the minds of countless students in the classroom. There's also the question of how do you pay for that education? Well, to help us answer that question, I recently spoke with Vince Pazione. Vince is CEO of a company called LendKey. He's also an expert on the topic of student lending. Here's our conversation. Vince, thanks for joining us this morning.
Thanks for inviting me.
So student loans, young people's dream to go to college, further themselves, get a great job, live the American dream. A lot of challenges with financing college education. Before we get to the options of what you have to finance your student loan, talk about the process. You have a lot of experience with this. What should young people be thinking about as they're looking to select a college, think about their higher education future?
Well, it's a great question, and I think it all starts with school selection, right? Be realistic, understand what you're interested in, understand what potential careers can come with the kind of degree that you're going for, and understand the outcomes, what kind of salaries, right, that you can get for these degrees. And the average graduate today has a salary of about $44,000 a year.
Okay.
So, being realistic about the outcomes really does help.
Right. So, as a young person looks for their financing options, obviously student loans, what we're here to talk about as an option, are there other things they should look at? Grants, scholarships, are there easy ways to do that?
Sure. So as a student and a family start to think about the whole college experience and then the financing piece, typically it starts right after you're accepted, right? You'll get an award letter from the school. But before that, in January, there's the opportunity to actually submit a free application for federal aid, right?
Sure.
And you can start that January 1st, right before that spring, right? When you're still going to start to get these award letters. And the first thing I always tell parents is understand, and borrowers, students, is first exploit all the free options you have. These are grants, these are scholarships, there are plenty of great websites out there where you can find those kinds of scholarships and grants. The second is federal, right? Always exercise all your federal loans first, understand, right, those federal options and what they mean to you. And then finally, what's left is expected family contribution, right?
Mm-hmm.
So that's your total cost of education, minus your scholarships, minus your federal aid, is what's left that the family needs to deal with, right? And that's typically when families will then turn around and decide whether they're going to turn around and take a private loan or they're going to try to figure out a way to fund it themselves, right? Now, I always tell folks, time's on your side, start early.
Sure.
And it's never too early to start. This is a huge expense. So you have a child, you just had a child, celebrate it, open a 529 plan.
Sure.
These are tax-deferred savings plans, and save a little bit every single month.
Right.
$25 a month from the time your child is born to the time they need to go to college, it's probably $8,000.
Sure.
That's a nice amount of money to at least begin the nest egg.
Right.
The other is encourage relatives to make gifts into that 529
Sure.
plan, right?
Sure.
And set a realistic goal. Maybe you can handle a third of it, right?
Right.
You've got multiple children. So, and then as time goes on, re-examine it and decide whether or not you want to increase that savings over time.
Right. And as credit unions, we're passionate about saving and financial literacy, so we're always promoting that to our members. Learn these options that can help you do these things. Now let's get to the point where you've done all that, you've exhausted this federal aid, scholarships, you know what you personally can contribute, and you need a loan. What are the loan options you have going into college?
So two categories. The first are your federal loans.
Yep.
So there are Perkins Loans. Those are typically folks who have excessive need, who can demonstrate need. And then there are two types of federal loans, also federal loans you can use while you're in school.
Sure.
There's Stafford loans, and there's a subsidized loan, which is also needs-based, where the government is actually paying the interest while you're in school. And then there's unsubsidized Stafford loans, where the interest is accruing while you're in school. And then for graduate students, there are PLUS loans, which will cover you for full cost of attendance. So those are all your federal options. And typically, if you're a freshman, what you'll see on your award letter is for most students, is you'll see an unsubsidized direct loan or Stafford loan for $5,500. Sure. Now, throughout your career in college, you could borrow about $31,000 in that direct loan program, right? Mm-hmm. Now, the second option are private loans. Those are loans that credit unions would make to their members. Those are typically underwritten, they're not needs-based, and about 90% of those are typically co-signed. And the benefit of this co-signer is that typically the borrower doesn't have a strong credit history, So having a strong cosigner gets them a better rate.
And just for our audience, so cosigner is when somebody agrees to be on the loan to back up and pay if the primary borrower cannot pay.
Very good point, Paul. I can't tell you how many times cosigners call and say, is this a reference? It's not a
Right.
reference. You're accountable and responsible to pay that loan back
Sure.
if the borrower cannot. Now, in most cases, the outcome is that the borrower graduates, they get a great job, and they're able to pay the loan back. But obviously, early in their life cycle, especially when they're freshmen, they don't have a large enough credit profile yet
Sure.
to actually have the kind of credit to stand up to get the right loan.
So what's a typical structure of a private student loan? You know, a mortgage, everybody knows it's 30 years, 15 years, adjustable rate. How does a student loan typically structured?
Okay, so let's start with the federal, and then we'll go to the privates.
Sure.
So federal loans, they're fixed rate loans. The current rate on a direct loan program is about 4.45%. There's a fee on the front, it's about 1%, and the repayment options are 10 to 25 years
Right.
can be repaid, and they're a fixed rate loan.
Sure.
On the private side, you can go variable or fixed. You can go from a 5-year term to a 15-year term. Okay? And typically there's some borrower benefits that come with the loan. So ACH discount, which means that the lender is willing to drop the interest rate, typically by 1/4 percentage point, if you allow them to directly debit out of your checking account, which is
Sure.
something most people usually do. There are also things like forbearance in a private loan. So once the loan goes into repayment, if the borrower suffers a health issue or loses a job, there's an opportunity for them to stop paying the loan for a period of time or
Right.
lower the payment. And most of the lenders, most credit unions offer about 18 months of forbearance in 6-month increments.
Right. Now, young person going to school, probably don't have a lot of income while they're in school. Are they making a payment while they're in school? Are these loans deferred until they graduate?
So different private loan providers offer different options. Most of the credit unions who use our product offer the ability for the student to pay $25 when they're in school
Right.
or pay the interest on the loan. Let me tell you the benefits of that, right? The benefit is that either way, making a payment while you're in school is going to demonstrate and help you get some financial discipline. You know, we've all seen the headlines where a student graduates and doesn't understand how much they owe.
Sure.
The nice part about making that payment is every month you see a statement and you see how much you owe. The other benefit is that those payments go to pay down the interest.
Right.
So you are reducing the interest expense on the loan while you're in school.
Sure. Now, once you graduate, you have all this debt, and you may have had a private student loan, a federal student loan. I know credit unions have begun to offer consolidation products or refinance products. What's the benefit of bringing multiple loans together into one? Is it rate? Is it payment? Is it ease of use? What are some of the things that make sense?
It really depends on the borrower and their circumstances.
Right.
So some borrowers are looking for the opportunity to basically manage cash flow, so they want a lower payment. And they may be looking for an option to extend the term on the loan.
Sure.
Right? Others might be looking to reduce the interest expense on the loan over the life of the loan. So they might take a shorter term. They might opt for a fixed rate loan where you pay a premium to fix the rate versus a variable rate loan because they feel that they're going to pay the loan off early. So the process I tell people to usually go through is understand what your financial needs are. And before you make any big decisions financially, now that you know you got that great job and you got that great paycheck, is prioritize your payments first. So don't go out and get the car or commit to an apartment
Sure.
yet. Understand what you owe.
Right.
Then look at what you owe across your federal and your privates and make that decision. Is it a cash flow decision? Is it an interest expense decision?
Right.
Most of our credit unions who offer a refinance program are saving the borrower on their private loan and federal loans about 2 to 2.5%. So on an average loan of $50,000 outstanding debt, that's about a $10,000 savings in interest expense
Sure.
over the life of the loan. The other thing that's unique about our credit unions, they'll offer an interest-only pay for 4 years on the beginning of that loan. So if you took out a 15-year term
Sure.
refinance loan, for 4 years you only pay interest. So if you're in the kind of field, let's say you're a resident, you've got a medical degree, where you know your income is going to go up over time, and you're trying to manage a short-term cash flow problem, it's a very good option for you.
So this is all great information for people to know. Finally, last question. We hear all the headlines about $1.4 trillion of student loan debt now exceeds credit card debt. It's becoming a big form of debt that a lot of consumers have. How big do you think that is, 1.4 trillion? Do you think it's a big problem, or it's manageable, or what are your thoughts on the debt that we hear so much about?
So 93% of it is in federal loans, and almost $600 million of it has happened in the last 4 years. And a lot of it is because of the Great Recession. We have what we call non-traditional students who went back to school and availed themselves of federal loans. So I always look at the borrowers that are graduating, how much debt they actually have.
Right.
And today the average borrower is graduating with about $29,000 worth of student loan debt. And my rule of thumb is if your annual starting salary is greater than that debt, then it's still a pretty good trade.
Sure.
Now, it's a big number, and we always worry about it, but it also is being driven by college tuition costs increasing over time.
Right.
And this year we've seen that schools are breaking tradition, right? And I say that with tongue in cheek. That 5% compound annual growth rate of tuition increases has stopped. We're starting to see that come down.
That's great.
So it is an issue of supply and demand.
Sure.
And what we're seeing is demand is coming down post the Great Recession, and you'll start to see that these loan levels will start to come down as well.
Great. Well, Vince, thanks so much for the great advice and the great insight on student loans. We really appreciate it.
Thank you, Paul.
Family's important to me, and when I come to the credit union, they always know exactly what I need. It's like one-step shopping. You just come here and they know what your needs are. And the credit union, I feel like this is where, I'm taken care of. Do you remember that show, Cheers, where everyone knows your name and you feel real comfortable in talking with them? That's what credit union is for me.
For many small business entrepreneurs, access to liquidity and capital can make all the difference in whether the business survives and thrives or is forced to close its doors. How do business loans work, and what does it take to receive one? Let's go to Navigant Credit Union and Tim Draper for the explanation.
Thanks, Paul. So, Jeff, thanks for taking some time to talk with us today about small business. We hear a lot about small businesses these days, and wondering a little bit about how you think of small businesses. How do you define a small business?
Well, I think as most people know, the vast majority of businesses in the country, especially here in Rhode Island, are defined as a small business. Different definitions. SBA says a small business can have revenues up to $35 million. The standard definition is usually revenues up to $7 million, employees 500 or less qualify as a small business. So as you can imagine, that encompasses the vast majority of businesses, especially in our state.
Yeah. Is it a good time to start a small business now?
Well, a good time, I guess, economically speaking, the economy is starting to roll. I think we're even seeing it here in Rhode Island, which we tend to lag behind the rest of the country. A lot of the economic indicators that are coming out say that Rhode Island is really starting to move in the right direction. I think Len Lodaro said it best. It's not quite ready time to pop the champagne corks, but we are certainly moving in the right direction. So if a person has a great idea and they feel very passionate about it and they have a good plan in place, certainly a good time to start a small business.
So can anybody start a small business?
Oh, sure. Anyone can start a small business. Depending on what type of business they want, it's important to have a business plan. It's important to have financial projections. It's important to have the idea that you want to do, have experience in what you want to get into, and be able to sell that, I guess is the best term, to a financial institution such as Navigant Credit Union for us to make a decision as to how we can help by lending them some money.
Okay. So talk to us a little bit about the steps that one might go through. I've got a great idea. Okay, I'm Joe or Jane, business person. I think I want to start a business. How do I go about doing it? What's step one?
Well, again, step one is having the idea, having the thought of what it is you want to do and why you want to do it, and how are you going to be able to convince us that you're the right person for that business. Most people that want to start a small business try to do it at least in an area they have expertise, experience. Maybe they don't want to work for someone anymore. They feel that they can do it better, maybe on a smaller scale, maybe on a larger scale. So you have to have, in our view, you have to have experience. You have to have a good resume. Sell us on the idea of why this business makes sense, especially in the market where they're going to develop that business.
You have a great analogy that you tell us all the time about expertise in a particular area of business.
Right. So I always like to say, I'm a banker, and I decide maybe I'm a little tired of banking. I want to go open up a restaurant. Probably not a good idea.
a good idea.
But I'm a good cook. Probably not a good idea. So we always say, but if somebody does want to open up a restaurant and they have restaurant experience, maybe they've worked in restaurants for a good period of time, and they have put together a plan that makes sense with reasonable projections. We, with the help of the Small Business Administration, will look at that deal, and if it makes sense to us, sure, we'll take a chance, because that's how small businesses start in this world and in this country. Somebody has to take a chance on someone. We like to help small businesses grow. We like to help small businesses start.
So we're going to come back to SBA in just a second, but you talked about a business plan. So for the average person who's never started a business before, who has no real experience in it, what is a business plan, and what are the components of it?
So a business plan is kind of like I call it a short story. Maybe it's a 2 or 3 page summary of what this business is they'd like to start, why they think it's the right idea, a resume. Very important are 3 years of financial projections. So we want to see revenue projections. We want to see what we call an opening day balance sheet. What is that going to look like as far as cash in the bank? What type of loans are they seeking? What type of equipment do they need to buy? Do they need to renovate a building? Things of that nature. Business plans don't need to be books. They need to be maybe 5 or 10 pages, maybe a little more in some cases, but that's usually more than enough for a financial institution to make a decision that this is a good plan and we support your idea and here's how we can help.
So I come to you with a business plan. I say, Jeff, I need some capital. I need to get started. I've got this great idea. Here's my prototype. You may not necessarily say, okay, great, the credit union is going to give you all the money. You need somebody to help you sort of back that loan. And that's when we talk about the SBA. Tell us a little bit about the SBA and how that impacts starting small.
So the SBA is a program, they provide government guaranteed it's a loan program that they will provide a guarantee. The SBA doesn't exactly lend money. The financial institution lends money. So Navigant, with the help of the SBA, will make a loan to an individual, whatever the dollar amount is, and then depending on that dollar amount and depending on the program, the SBA will provide the credit union with a government guarantee that in the event the business fails at any time during the term of that loan, the government will back us up with up to an 85% guarantee of any balance remaining after a liquidation or dissolution of the company.
But a financial institution is still not going to just say, we'll give you the loan because of the SBA's backing. There still has to be some diligence on everybody's part.
Sure. So what's presented to us is a financial projection. We're going to vet that projection and try to make sure the numbers make sense. We do a cash flow analysis, a debt service coverage analysis. We want to make sure that the projections, A, are reasonable, realistic, and will the income provided or the revenues provided by this company provide sufficient net cash after all expenses other than the loan to pay the loan, and with a little bit of extra coverage. And that's something we would talk to the potential borrower about in detail when they come in. The issue is having that business plan, and some people say, well, I don't know where to begin. How do I make up a business plan? There are resources here in Rhode Island. There's the Small Business Development Center, SBDC. They are business professionals, most of them are retirees, that work with individuals, that come in with an idea for a business. They will help them craft a business plan, including financial projections, including the story that needs to be told, including what is needed by the borrower for capital, equipment, furniture, fixtures, things of that nature, possibly even a line of credit to have for operating cash flow during the first 3 to 6 months, first year, when it's difficult. It's not easy to just get a business off the ground. Because you build it, they may not come. So you got to have some cash in the bank to get through those first operating cycles, depending on the type of business. Or if it's a retail business, you've got to bring customers in. So you need to spend a little money on marketing. You need to spend a little money on employees, wages and salaries that have to be, because you have to have people there to wait on people when they come in. So that's kind of an operating cash line of credit in some cases that we can provide as well.
Now, do all credit unions offer business loans, or?
I wouldn't say all. I know there are several in Rhode Island that do. Yep. I think Navigant certainly leads the way as far as credit unions go when it comes to commercial lending and small business loans.
Becoming a little more popular with credit unions to provide these business loans?
I think so, sure. I mean, business loans can provide a better rate of return for the credit union.
Okay.
But they're more difficult to do, and they're more challenging, and there's certainly more risk. So we like to help small businesses get started, and I think we've been very, very good at it, especially over the last 4 or 5 years.
So you're saying that credit unions are lending right now?
Absolutely. I think that credit unions have proven over time, and the argument in Congress has been made, we're lending money. We are lending money to small businesses where sometimes a lot of the banks may not be lending to the smaller businesses that we look at. For whatever their reason is, it's fine. But I think we have found our niche, and we are very involved in every community where we have a location, and we're certainly happy to help out.
Yep. Typical loan size?
I would say typical loan size is probably somewhere between $10,000 and $250,000. It really depends. But I would say it really just depends on the business and what they need.
Any markets you see stronger these days than another? Are restaurants starting? Are manufacturing companies starting? Service industry?
I think manufacturing in Rhode Island is better than most people think it is.
Yeah.
We've found some really good manufacturing companies out there that have done very well in their niche market. I think we have what we call our emerging markets in cities like Central Falls, Providence, Pawtucket, those areas. And yes, we've seen a lot of restaurant activity, new restaurants that have opened, small retail operations that have opened. So these emerging markets are a great source for us to see if we can help out. We have small business owners meetings in our Central Falls location once every 3 months, roughly. We have great turnouts. We have 30 to 60 people that show up to these meetings, and we try to gear each meeting to small business, whether it's how do you start. We had people from the Secretary of State's office in one time that came in and explained the process of getting licensed and getting set up with that office. And so I think it's very helpful for people. And then we stick around after the meeting and we answer lots of questions, and it's resulted in some small business loans for us.
Yeah, it's great. It's really about bringing people and resources together, and the credit unions are really good at doing that.
Yes.
Providing education, and then certainly capital for small businesses to work. Hey Jeff, thanks for coming.
My pleasure.
I appreciate it.
Thanks, Tim.
Thanks for talking to us about small businesses. Back to you, Paul.
In our final segment of today's program, we'll hear from David Saval, president of Rhode Island Credit Union. David will talk to us about his credit union and the many services it provides to its members. That's our Credit Union Spotlight, coming up after this break.
Rhode Island Credit Union, proudly serving its members since 1946. At Rhode Island Credit Union, we are not accountable to stockholders, we are accountable to you, our members. We are committed to providing affordable products delivered by a knowledgeable and friendly staff. We know our members and understand their financial needs, and we are dedicated to serving all of those needs. Rhode Island Credit Union, more than just banking.
We're more than just banking, Rhode Island Credit Union.
Back in 1946, state employees pooled their resources to help some poor state employee whose wife was very, very ill. They pooled their resources, they got together, and essentially that's how Rhode Island state employees began. We were Rhode Island State Employees Credit Union for many, many, many years. We moved into a facility across the street from the State House in 1964 and have been here ever since. Obviously, we have a newer building now, but that is how we began. Our field of membership is anyone that lives or works within the state of Rhode Island or within 50 miles of any of its borders. We have offices now in Providence, Cranston, Bristol, Kingston, which is on the University of Rhode Island campus, and up in Pasco. We have approximately 25,000 members, and approximately $270 million in assets at the present time. We offer everything that our members need, which is affordable financial products and services. Lending includes auto loans, motorcycles, home equity lines of credit and fixed home equity loans, personal loans, mortgages. Now let me tell you a bit about our Visa Rewards program. We have a new Visa Rewards credit card, which we feel is very competitive in our marketplace here and probably nationwide. One thing that's a little unique to us is we own our own portfolio. So therefore, if a member has an issue, etc., they can come right to us and we'll take care of that issue. We also offer, obviously, savings, checking, IRAs, certificates of deposit, club accounts, money market accounts, both savings and checking. And we also offer, like everyone else, we offer online banking, mobile banking, and now remote deposit capture. We offer all kinds of different financial education, obviously, for our members. We want our members to start very young. We start with youth accounts, which teaches them good financial habits right from the beginning. We also offer a website link, which is to this great product called Home and Family Finance Resource Center, right off of our website. It's an online source for financial information. They offer financial topics on credit, retirement housing, small business, savings, investing, insurance, really like complicated topics which they make very easy to understand on this online source. Our goal is to serve the financial needs of our members and support our communities, and financial education is a perfect extension of this mission.
I love navigating credit union.
My name is Kelly White. I've been banking at People's Credit Union for over 12 years. I love the convenience of People's Credit Union. I'm a busy mom of 4. The mobile app saves me lots of time. I can do my banking from anywhere, and that's important to me. I can deposit checks, make transfers, and check my balance while I'm out with the kids running our errands. Friends and family ask where I bank. I always refer them to People's Credit Union.
If it matters to you, it matters to us. People's Credit Union, you belong here.
And that's the September edition of Better Banking. Thanks for watching. As always, we invite you to take a minute to tell us what you think by sharing your comments with us. Our email address is betterbanking@ccua.org. For all the credit unions throughout the state of Rhode Island, I'm Paul Gentile, wishing you and your family a better banking experience. See you next time on Better Banking.